Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the Tick Scalping live webinar over at Switch Markets. For today, we're going to do a little bit of live tick scalping. I'm going to lay out some scenarios and some different rules, things we're going to do, and see if we can't generate some profits. We've also got a little bit of the news of the day that we're going to open with. I think that it is an interesting session, nice, big, active morning. From here on in, I would be looking for the markets to really start drying up. So definitely, if you're already up and you've made a few bucks today, that's great. But as far as what can we really do for the rest of the session, probably need to be cautious. Probably need to be thinking more about maybe now is not the time to take big risks because we are looking at the market closure for tomorrow. That's for the Thanksgiving holiday and then also Black Friday. The markets will be open on Friday, but it could be a challenging session just because the liquidity may not be exactly where we need it to be. So good to see everybody back in the trading room. Remember, we're live over at the How to Trade trading room every day, and we're also live here exclusively on the Switch Markets channel on YouTube for our live webinar series. And today we're talking tick scalping. So I've got a lot of requests over the past, I would say, several months to get into tick scalping, to talk a little bit about what it is and maybe do some demos and show you guys exactly what the mindset is for a tick scalper. Full disclosure, today is probably not the best day to be tick scalping, at least not right now, just because we don't really see the activity. You like a lot of volatility in deep markets when you're doing this. There is some volatility out there, so we're going to focus on a currency futures. Also, we're going to look at the E-mini Dow, and then we're going to look at gold and crude oil, and those things are all going to be futures contracts because today we're looking at ticks. Now, you can also scalp pips. You certainly do that, but you're probably going to want to focus on probably just the majors there on the Forex or CFD products with very, very tight spreads. So today we're going to focus on futures. The next time around, we'll see if we can make a few pips. So good to see everybody. Bobby Bob, always welcome, Bobby. Good to see you. Ralph H. Hey, Shane, happy Thanksgiving. Happy Thanksgiving, Ralph. I'm confident everybody's doing well out there, getting ready for a nice break. T Marina, happy hump day, all. Yeah, this is pretty much the end of the week for most traders, but if you're going to come back Friday, then it would be the middle of the week. Happy hump day. Ice Hazy, hello. The US 30 was fantastic today. Yeah, it's a nice big rally. We're definitely looking towards that 40. I don't know. Right now we're trading 47.5. I would be surprised if we don't go up and test 50,000 in the near future potentially by the end of the year. It really just depends on the rate cuts. A lot going on there. We'll analyze that probably next week. But today we're just going to see if we can scalp a few ticks. Tina Sheen, good to see you. Tina, hi, Shane. Yeah, I'm doing very, very well, guys. I think that we've got some pretty good stuff coming our way here later today. I think the rest of the year probably going to be relatively slow. We've got about another 2 weeks of premium trading next week and the week after. And then after that, life gets pretty tough for traders just because the liquidity dries up and it gets to be very difficult to find trades, let alone execute trades. So be sure to check back in our trading room over there. You're going to see exactly what our schedule is going to look like for next week. I'll probably have that up a little bit later today, at least with some ideas on what the stream schedule is going to be beginning next Monday. Okay. All right, here we go. We've got an interesting type of a scenario setting up today for us. We've got a couple of things that we need to cover before we dive into the tick scalping. Black Friday, remember it's a Black Friday sale over at Switch Markets. They're going to be launching their specials tomorrow. So if you're a brand new customer to Switch, or if you're thinking of trading with Switch, head on over, check out the Black Friday sales. Those are going to be coming online here in the next several hours. They're pretty good for new customers. And remember, if you're an existing customer, you can head on over and you get your zero commission accounts, you get your tight spreads, you get all the benefits of trading with Switch Markets. So you're definitely going to want to head on over and see if you can get something going there. For today, basically the only event that I saw out that was really worth covering was the EIA crude oil stocks number, sort of an interesting number. I put something out on X a little bit earlier. Really, we saw another build in supply, 2.774 million week over week for crude oil. That's really sort of a higher number than we were expecting. We were expecting a draw of 1.3 million, and that was going to be a little bit better than the previous release, which was 3.42 million. Now, the biggest thing we got to remember with this, crude oil inventories, Thanksgiving week, typically you do see a bit of a downturn in the crude oil builds. The reason why is all of the holiday travel. So even though this week, sort of we're talking about what happened over the last week in our oil supplies, next week, pretty much we're not assured that we're going to get a draw on supplies, but we are sort of looking for numbers that are going to be down a little bit. And that has to do with Thanksgiving travel, not just overland travel, but also air travel and everything that comes along with the holiday. So definitely keep an eye on that. The Chicago PMI for November, academic number. I wouldn't get too carried away or wrapped up with it. Came in at 36.3. That was well beneath expectations and the previous release. So we've seen a lot of consumer sentiment numbers. We've seen a lot of PMI numbers, academic figures that sort of speak towards the bearish side of this market. Right now, bidders don't care. They're buying stocks, and they're buying a lot of them. We are seeing a rally really across the board, a little bit of a downturn in the U.S. dollar. But as far as crypto goes, crypto's sort of hanging on. We've seen Bitcoin break positive. Now we're rallying up towards 90. I thought that was a pretty good trade. And also Ethereum. Ethereum is back up above 3,000. So you're seeing risk assets coming back online going into the break. That's interesting to me. It's very, very interesting. All right, guys, let's go ahead and get started. Let's do some tick scalping here. So what is tick scalping and how to use it? Remember, if you want to find any of these videos, you head on over to the How to Trade channel on YouTube. We got about 20,000 subscribers. A lot of content over here, though, and you just cursor down and find the exact video, or you can just go to this search function, go tick scalping, and you should pull up our video right there. And there it is. What is tick scalping and how to use it in 5 minutes? I do a live example of exactly how to do this. You can get in and get out of the market relatively quickly. You've got to understand what tick scalping is. Tick scalping is a very, very tight way of trading. You're very, very fast. You're in and out. Tuku and Lita, good to see you guys. Tick scalping is we're in and we're out. That's how you need to be thinking if you're thinking of tick scalping. High-speed trading strategy that profits from tiny movements or ticks by making a high volume of trades and that lasts from seconds to minutes. Now, today, I don't have any long-term levels that we can tick scalp. I love taking long-term levels and tick scalping them on really short time frames. That's my favorite thing to do. Spotting long-term Fibonacci levels, long-term moving averages, weekly highs, weekly lows, daily highs, daily lows. Things like that really give you a tremendous edge when you're tick scalping. We don't see any of those on the board for right now, and it shouldn't surprise anybody that that's the case. We are mid-session on a Wednesday, going into the holiday. We don't have any of those big levels that we can key off of. However, we do have some short-term things that we're going to be doing strategically that are going to give us a bit of an opportunity to trade. So tick scalping, what you need to remember is, what is it? You're taking small profits repeatedly. Well, the way that I like to do it is I like to set a goal or an objective, and then I work towards that objective by taking a lot of trades and taking small ticks on each trade. That's the idea. Now, the other idea is this, that you have to understand if you're going to tick scalp. You cannot let a loser get into your pocket. Meaning, tick scalping isn't, we're going to go in there and lay 25 ticks risk to try to make 2 ticks. It will not work. Eventually, you will get hit. You will get hit, and you will get hit stiff. So you've got to understand the mentality of a tick scalper. A tick scalper is taking the money when it re-enters the market. That's what you're doing. You buy right now, and it goes 3 ticks or 2 ticks in your favor. Bam, you're taking it. All right? You get into the market, and it goes against you 2 or 3 ticks. Bam, you're out. You're done. You cannot afford to take a 10 or a 15 tick loss when you're only looking to make 3 or 5 ticks. It will not work. Now, over time, you would be surprised at how long you can buck the odds, how long you can lay those big risks down and walk away every day by getting your moves. You would be surprised. You can go for weeks without having a losing day tick scalping. You can do that. Now, you've got to be smart about your risk management. You have to understand that if you take a big loss as a tick scalper, you're in big trouble. That's all there is to it. So I really want everybody to understand that when you're tick scalping, we are in and we are out. That's all there is to it. Let's see right here, Andrea. Hi, Shane. Let's go Bitcoin. Yeah, that Bitcoin bid's turning out pretty good, isn't it? We're back up to about 90,000. I think our topside target was 94. I mean, I really saw that as being just a beautiful swing trade. So we're watching that relatively closely. Pretty good bounce, though, off of Bitcoin and Ethereum, both things that I'm holding longs in that contest. And we're going to go ahead and review that next week, see where we're at on the leaderboard. Not doing too bad, though. Not doing too bad. Should be a lot of fun down the stretch. We're going to take some big risks and see how it goes. All right, so here we go. What is tick scalping? Let's just dive right into it. Tick scalping for today. We're going to have a goal of 9 ticks profit. Our maximum risk is going to be a 1-to-1 risk versus reward. Now, the thing about tick scalping is the risk versus rewards are going to vary. They're not going to be a standard position trade or a standard trade ID or anything like that I typically put out there. We are going to look for instant gratification. We want immediate positive movements in price that are coming right toward us. Target markets, we're going to look at crude oil, gold, Dow 30, Euro FX futures. That's 4 markets on different time frames. We should be able to get something done with regards to a couple of trades. Okay, right now we've got a trade coming our way that we're going to go ahead and execute. Strategies, Fibonacci's 920 EMA crossover, 5813 EMA crossover. We'll walk through those time frames, short to ultra short time frames. Okay, right here on the US 30, we are coming back down. 38% of today's range is at 47,484, and this is where we want to be. We want to go with a limit order right here. I want to buy limit 47,484, somewhere in that zone. 47,487 is what we're going to go with. We're going to go with 1 unit, and we're going to go ahead and let this one run and see if we can get in there. So there's going to be sort of our limit order. Let's see if it even got passed through. Okay, there we are. Now, we're looking to scalp that 38% level of the daily range. If we get an opportunity down there, we're going to have a pretty good chance at it. What are we looking for out of this? I'm looking for an immediate bump. I'm looking for a fast bump here. So if I'm looking for ticks, our goal today is 9 ticks. What do I want to take off of the E-mini Dow? Probably want to look at, on this trade right here, you see the volatility on our trading dome. I probably want to be looking for 4 to 5 ticks. Now, that's a really sort of an extended tick scalp. Maybe we could shoot for 3, but given that volatility, I think we can shoot for 4 and be in pretty good shape. So what are we looking to do here? We're at 47,487, so that's going to be our entry. That's about 3 ticks above our 38%. And what we're going to be thinking about when this trade goes, if it does go, is the timing of this. I want to understand before I get into the market that I want to get in and I want to get out. We're not going to sit around and wait. We're going to react as quickly as we can. We're going to try to secure our profits as quickly as we can. So my take profit, I'm going to go ahead and set this up just a little bit. We're going to go to, well, that's a little bit too big, but we're going to go right there to 91. Okay, now you'll notice that's very, very tight. Now my stop loss, I'm not going to put down a finite stop loss. I'm going to judge this on the fly and manage the trade. You say, Shane, shouldn't you have a finite stop loss down? I said, listen, when you're tick scalping, it's really a lot about feel. It's a lot about feel and understanding, okay, if this thing goes against us immediately, we're going to get out. And if we end up getting hit 8 ticks or whatever, we're going to be all right. We can fight back from that. We can't fight back from 15 or 20 ticks. So we've got to be very smart about what we do. So we've got a 30-minute line in the sand. That's going to be our entry point. We've got that drawn up. Let's take this right down. Let's take this right down to a 15-second chart and see where we're at. Now you can see, even on a 15-second time frame, what we're looking at right here. Very, very compressed profit targets, very, very compressed price action. This is an interesting type of a situation here. What we want to do is we want to get that immediate hit. We're looking to take 4 ticks off of this with just one contract. That's going to be $20. You say, Shane, that's not much money. And I go, no, it's not much money. But we're going to have to remember we're tick scalping. We're tick scalping. So that would be the first trade that I'm looking at, and that's using our Fibonacci retracement sequence. And I'm going to have my close eye on that. We're down about 60 points, somewhere in that range. We could definitely get that one by the end of the session. But we're all lined up. That's going to be our tick scalp number 1. So we're watching that closely. Should pay us off if we get an opportunity down there. We just have to wait and see. Okay, let me see. Bobby Bob. Hi, Coach. My friend from Kenya wants to join us as a beginner. How can we assist him? Just have him just go ahead and send him over to the How to Trade trading room, Bobby. He can join us. Just sign up. Come on in. Sign up. The service is complimentary. And then just join the live streams. And just go right there to our upcoming streams and click on it, or just at the top of the screen, you should see we're live. If he doesn't want to do that, he could head on over to Switch Markets at over there on YouTube. And if that's the case, we can get him involved relatively quickly. Just take a look at the video. So the best thing to do is just to join the How to Trade, and you'll never miss a beat. That's for sure. All right, so that's going to be our first trade right there that we're watching closely, and that's going to be your E-mini Dow futures. Absolutely huge. All right, let's take a look at a couple of our other markets right here. E-mini, this right here is going to be your E-mini or Euro FX futures, excuse me. Euro FX futures are they track the Euro USD. So right now we're trading at about 116.07. The Euro USD on the cash market's at 115.95. This is a 1-minute chart where we have some crossovers. We have our 920 EMA crossover. There's our 9, and it crosses over our 20. Now we can tick scalp using this. We just have to really understand that it's going to bring our risk versus rewards very, very tight. So a lot of times we like to use these as a position trading setup, potentially. That's exactly what we did on the Bitcoin trade, the 4-hour Bitcoin, which is blown up in our favor. This is a different mindset. This is fast, so our time frames are going to be very small. So if we're going to order, what are we looking at doing right now? What we have is we've got our RSI sort of in that kill zone. The RSI is right there. We're in overbought territory. Now we're looking to sell this thing. If we're looking to sell this thing, what are we going to do? We're going to wait until we get the 9 to cross under the 20, and then we're going to sell it. Now we're probably only going to be looking for a few ticks here, maybe somewhere in the 4 to 5 range. We got to wait and see how the trade sets up, but I do believe we may have a chance to trade this one by the end of the live stream. Interesting stuff right there. Watching that closely, you'll notice that what you really have to understand here with this Euro FX is this time of day, the volume dried up a little bit. The market's not moving a whole heck of a lot, and that's sort of indicative of what the Forex typically does in the U.S. session this time of day. Let's see right here. Let's see. Yeah. What's the difference between a tick and a pip? Eyes hazy. Well, a tick and a pip is essentially the same thing. A pip is the smallest unit that's going to move in the Forex market. So a pip is a point in percentage. In futures, a tick is a tick. It's still the smallest increment of pricing, but it's not necessarily like it. Let's look at this. This is a good example. You'll notice that here there's no spreads. So this is actually these would be fractionals. These would be half pips. But this tick in the Euro FX, that's going to be just the smallest increment of that futures contract. So the difference is basically a fractional pip is the smallest movement on the Forex, but a pip is sort of your smallest increment that I would say that I would trade. I wouldn't trade fractional pips. On the futures market, a tick is just the smallest movement in price. That's it. So when we're looking at how we can trade, what can we really do? Well, if we focus on ticks, it's the smallest movement in price. So right here, we're starting to get our trade to set up. We're really interested in potentially taking a short here. We just have to get our cross under, and that's going to be our 9 crosses under, and then we're going to go ahead and sell the market. We're going to go ahead and sell a market order right here with 1 contract, and we're going to be very, very diligent about what we're looking for out of our profit target. This isn't a position trade. We want to get in and out. Now, I can tell you from experience that trading Forex pairs and trading FX futures, Forex futures basically, it's a heck of a lot slower than trading that E-mini Dow. If that E-mini Dow comes our way, we're going to be in and out of that in a few seconds. Now this is going to be a little different. This may take us a couple of minutes maybe to gravitate down towards our profit target, which more than likely is going to be 3 ticks or so. Now we're getting very close. This is our 1-minute chart. We're getting very, very close on getting our crossover in a potential first trade of the day. For this trade, we're going to go for 3 ticks. All right, 3 ticks is going to be essentially the way that this is priced is we're pricing these in terms of half ticks, and that's a long story about how the CME wanted more action on their trading, and so what they did was they cut the size of the the Euro FX futures. They cut that in half from 12.50 a tick to 6 1/4, and in order to do that, they have the tick size. Don't get confused by that. We still see that we just have the smallest tick. The tick value is just the smallest movement, smallest increment. We're going to have a shot potentially to take this sell right there. We are going to go with a market order, which is going to be right on this bar close when we do get our crossover, and it doesn't look like we've got it just yet. Definitely want to be watching this one, though. More than likely in the next minute or so, we'll get an opportunity to take our trade. Interesting, sort of slow, setting up real slow. Tick scalping by its nature is fast. This is slow. Right here, you can see there just isn't much action in there. We should be seeing a market that is really moving, and we're not seeing it. So right here, you can see we're closing in on our crossover. Let's just go ahead and let us wait another 40 seconds there. Now, what are we really going to get here? We're probably going to be short somewhere right down in here, right around 116.05-ish. What's our stop loss right up here? 116.075. So we're probably going to be putting a real tight stop loss somewhere right in here, probably right above our moving averages, right around 16065. That's going to give us an opportunity potentially to shoot for our 2 or 3 ticks. But we've got to get this thing to set up first. We've got to get it to set up first. You'll notice we've got to get the crossover. If we don't get it, we don't get it. And then we got to move on to the next strategy and the next setup. This is a pretty good one, though. I think we're going to get this one very shortly. Interesting. All right here's going to be our crossover, that's for sure. Right here's going to be our other trade. You'll notice the big volatility that we had just a few seconds ago dried up, and now we're just sort of rotating sideways. Shouldn't surprise anybody. That typically is how the markets work especially on a holiday week. Still, though, coming in, we got to come off, what, about another 60 points, something like that. Interesting. Here's our cross under starting to develop. We'll see what we get. We're going to have to stick with these two trades here for a second, and then we're going to look at WTI crude oil, and then we're also going to look at gold futures, which there's a little bit more volatility over there in gold. This looks to me like we're going to get our crossover right here, our cross under, and that's going to be a pretty darn good entry point if, in fact, we do get involved here. Let me see. U.S. dollar, Japanese yen. Yeah, we'll cover a few of those markets toward the end of the stream. I want to get on the board and see if we can get and there's your reversal. So we got to wait, still got to wait for another trade potentially to set up here in this Euro FX futures. We were close. Just didn't quite get it. Very tight action in there. Very, very tight. You'll notice that the ticks, we could set this up for a tick chart. One of the reasons why we're sticking with low increment time charts for today is because the tick charts, I pretty much have to go through and set those up. They're a little bit different on your setup. You have to get, you got to cross over and get the tick data and everything, which we can do in the future. But I've traded tick charts in the past. A lot of the times you see real similar price action, especially when you're looking at like a 1 minute chart. And on something volatile like this, a 15-second chart's a pretty good, probably like a 250 tick chart, something like that. In any case, we're coming down on this E-mini Dow trade. Let's see if we can get it and see if we can maybe knock a few ticks in the barrel here to start off with. Still a few points off though, about 47,523. We're sitting down there about 40 points from here, which it can happen very, very quickly. In the Dow 30, we're just not quite getting the follow through to our entry point. But there it is. It's all lined up and ready to go. We'll see what we get here in a second. All right, this market's turned against us. We're going to have to wait a little bit on the Euro FX trade. All right, let's go over to our, let's see, what do we got here? Gold, not gold, but we've got your WTI crude oil futures. You've got a 5.813 right here, which potentially could have been a bid there. There was your crossover. The 5 crossed over the 8, and then price stayed right above all 3 on the 13, and you can see that was pretty much a winning trade on the 1 minute. Just a second ago, the bid would have been there on 58.08, and you'd have got out at 58.13, so that would have been a really sweet tick scalp. Let's just wait and see exactly what we have with regards to this setup. It doesn't look to me like we're going to get another one of these. We're just going to wait. Gold's the 5.813 as well, a pretty good scalping strategy. We don't really see, we saw a crossover back here potentially a few minutes ago right when we came on. Now we're sort of looking at a cross under. We're looking for this red crossover to cross right there. You're going to want it to cross the blue one. The blue one is your 8, and then you're going to want the close beneath all 3, and this right here looks like we're going to get it. So this is going to be a relatively quick trade. We're going to be in and out potentially right now, playing a bit of a break. And let's go ahead and see if we can get it. We're going to sell the market, and we're only going to be looking probably for probably 4 ticks, something like that. The top of this bar is up there at 205, 2044. So that's going to be a little bit much for what we're looking to do. That's going to be a 10-tick risk. If we were going to do that, we would probably have to shoot for 10 ticks or somewhere in there, maybe 5 or 6. We could certainly put that on. It's not a bad risk. It's just not the best risk in the world. I'd like something that's a little bit tighter. So if we do get our close, maybe right up around 205-ish or 204.5, something like that, we can dial in and maybe get a decent risk going here. So 2, 1, all right, that's going to go ahead and that's going to be our trade. Boom, sell it. Okay, there's our sell. You can see right here we're looking for a very, very quick hitter. What we want to see is this right here, maybe down to about 4 ticks somewhere right in there. Pretty good risk. It's not a bad risk. Your stop loss, you're probably going to have to go up above this bar, which is right in there, about $100, so about 10 ticks. If we wanted to tighten up, we could put it right in this area right here. It really is up to you. For me, we want to get in and out. That's the key to this. We want to get in and we want to get out. So I'm not really interested in taking a full 10-tick loss here. Let's just go ahead and wait and see how this unfolds. I think we got a decent opportunity potentially to get a bit of follow through, but you'll notice the market really is flattening out. There's your crossover. The red crosses underneath the blue. That's the first indicator. Price closes beneath all 3, beneath the 5, the 8, and the 13, and that's supposed to give us a bearish read on the market. So right here, very, very flat. A lot of dojis here on the 1-minute chart. You'll notice how our risk is very small. Okay, bam. We just cashed in. We got our 4 ticks. We were in that trade a little bit longer than I want it to be. Full disclosure, I mean, if we're talking tick scalping, we're in there a little bit longer than I wanted to be. So something like that. Let's go ahead and take a look at our tote board. What do we got? Okay, we got 7 ticks on that. 7 ticks. So if our goal right now is 9 ticks, we only need 2 more ticks to make this thing work. Interesting stuff. We're up about $70. One trade, it was a winner right there on gold. Fantastic trade. Came down and got us. I feel bad that we didn't get this one on WTI crude. Unfortunately, that's just sort of where we're at. So right now we're up about 70. All right, we're up $70 on the day. We're up about 7 ticks, $10 a tick on that gold market. So we're looking at potentially just about 2 ticks away from our target. What do we want to do here? The safest thing for us to do is to wait for this to come into play. I think we have just a fantastic area where we may be able to get long on that 30-minute Fibonacci chart. It's just when does it come our way? You'll see the volatility is definitely there. It's definitely there in the Dow 30, a pretty good one to be trading. We're just going to have to wait, though. That's probably the strongest play, and that would finish our day off. Let's go right here to this this Euro FX futures trade. We're sort of struggling right now to get any sort of normalcy in this market. What you've got is very low volumes. They're not very low. I mean, you're still getting, 12, 32, 34, 47, 102. 102 is pretty good volume for a minute. But what we're not getting is any follow-through. And so when we don't get any follow-through on a crossover strategy, it's really difficult to trade it. So let's go ahead, step back a little bit, and let's go back to maybe a 5-minute chart. Okay, a 5-minute chart, you can already see you got that buy right there shortly before we came on, and there's a nice little move that got you paid off. You also had a Fibonacci pullback that we could have traded, something like this. Right to 38%, and then there's the rally. So when we start looking at what's going on in this Euro FX futures, this is going to be a tougher one. So right here, what could we do? We could step up and look to bid that 38% on the 5-minute chart. Very, very aggressive trade, but it does coincide with that 20 EMA. So you've got a 20 EMA coming into play with your 38%. Is that the kind of trade that we want to make potentially here? It's not a bad one necessarily. It's only about, 8 ticks down there. So if we were looking to finish up our day with a 2 or a 3 tick trade, that's not a bad one. That's not a bad one. Now, in my mind right now, I'm saying, okay, we're up 7 ticks. We got a great fill getting out. Remember, your limit, your profit target down there, it filled us, and we got the benefit of the doubt for about 3 ticks, 3 extra ticks. So when we're looking at finishing up this day, what do I want to do right now? I want to make sure that I have a chance to make some money on a trade. 1604, somewhere in there. We've got a 20 EMA down there at 1604.1. It's very, very tight. Let's go for it. Let's buy it. Let's go buy limit. Let's go 1604. Something like that, 1604, and see if we can get the buy in there. So there would be our trade. There's our limit order, and we're only about a tick away. So let's go over to our trading dome. You'll see how tight we really are. Now, I understand the chart's like, oh, Shane, it looks like it's a long ways away. It is not. The reason why we would take this trade is we would be looking to bid the 38% retracement on the 5-minute chart, and then we would look to also be bidding that 20 EMA. Now, these are very short time frames, but we have converging indicators there. We have sort of a dead market. And if we get our fill here, we're going to have a chance to make a few bucks. Where do I want my take profit at? Let's go ahead and take our take profit up 3 ticks. Boom, boom, boom. There would be our take profit. Now, this could potentially be a longer trade. This could take us a little while to cash. You see how slow that price action is on that Euro FX futures. One of the things about the Euro FX is you've got to be patient with these trades. You can't just dodge in and out of them. You have to be a little bit smarter with what you're doing. So this is sort of an interesting trade. Where would our stop loss be? We're going to manage this trade. We're not going to have it on the board. We're going to manage it. We're going to watch price action, and we're going to manage it. How would I potentially do that? You've got a 5-minute chart here. That's what's giving us our technicals. All right, we've got a 20 EMA that we're buying on the 5-minute. We've also got a 38% on the 5-minute that we're buying. Do I want to manage it on the 5-minute chart? We could, but if we were looking to maybe to put the stop loss down in here somewhere, sort of problematic. What I want to see is I want to see what price is doing on the real short time frame. So here's your 1 minute. Now you can see the way that my trade is still set up on my 1-minute chart, even though we're using 5-minute technicals. This is an interesting trade. You can see there's a cross under developing. I'm going to be betting against it. We're thinking that we're going to get sort of this action right here. We had some bidders step in, and this market is sort of dead right here. Let's go ahead and wait and see what we can get here. We're going to ignore the 1-minute technicals. As a matter of fact, we could go down to maybe even a 30-second chart. just to see exactly what's going on here in the shorter term. What we want to see is price action. We want to see if there's any movement at all in the market. Now, as a tick scalper, you're always going to be thinking. I'm sort of spitballing and I'm thinking out loud, but I'm trying to establish the mindset that you need to have to do this successfully. Right here, we're thinking, okay, what are we going to get? We want to get filled at 1604 even. If we do that, we feel pretty confident that we can get this bounce back up to our 1605.5, potentially get paid off, and then that's going to be our day. Let's wait and see what happens here. We are very close to being elected and filled here. Fibonacci trade plus the 20 EMA. I like the trade. Flat market. We should have a pretty darn good opportunity here to get filled up and hit our target for the day. It's not a bad trade at all. Not a bad trade at all. All right, we're going to go ahead and let that sit because nothing's really happening right now. We're very close to being in, about 2 ticks away. We want to see a nice sweep down to 1604 and then a bounce up to 1604.55, and then that'll pretty much be a wrap. We're not going to be too greedy, meaning we're not going to be too quick on the trigger. We're going to have to let this one sit a minute because you can see how slow it is. We've got a pretty darn good opportunity. Like right there, we almost got filled up. We want to get filled right now. We want to see it. We want to get filled right now. We're joining the bid. There's about 132 guys on the bid right there. We only got 44 on the ask. Potentially, we could get a real nice break if we get filled. We just got to get filled. And that's tick scalping in a nutshell. Half of it's just getting filled up. Like right there, we're just teetering right on the edge of getting in this trade and then getting that pop right back up to 55. I don't want to see this market pop back up. And you can see right there what happened on our charts. We went right down there to 116.40 and we didn't get filled. We should already be out of this trade. Let's wait one more second. I mean, that was it. That was the trade. We were in and we were out. We did not get filled. So as a general rule, when that happens to me in the markets, when I get a perfect trade, and we had it, we were there at 1604, we didn't get filled. That means that the other folks that were in front of us beat us to the punch, and now you see price rotate right back up to our profit target. Anytime that happens to me, I do this. I go, nope, I'm not interested. Because if the next time it comes down and all of a sudden those bidders that we were going to cash in on right there, they're not there, and we get taken out, I'm going to lose. It's too much mentally to say, okay, I should have won and now I lost because I didn't get filled. You've got to be very cognizant of that, and you have to be able to pull these things off. You've got to be able to pull these things off when it doesn't go your way. Right there, we did everything right to get that trade, and we didn't get it. Is it frustrating? Yeah, it's frustrating. Can you let it get to you as a tick scalper? No, you can't. You have to be mentally tough and say, okay, we're going to walk and we're going to find another trade. Let me see. Wow, that's fast. Hello, Gordon Williams. Good to see you. Gordon, welcome. So this is what we're going to do. We're going to go looking for another trade. We need one more trade. This is the one that I'm very confident in, this one. But I don't know that we're going to get it here while we're on live stream. Let's go up to crude oil. Now, what's happening in the crude oil market? We missed our breakout, essentially. You've seen the market really rally up there to about 58.28. Let's go to a 30-minute chart here and see exactly where we're at with regards to the U.S. session. Extremely choppy. Right there is sort of your opening, your traditional NYMEX open. We've rallied. It's just sort of a flat session. If you wanted to try to make a play here, we certainly could. 5-minute chart, real similar to what we were going to do on that Euro FX. Spike low, spike high. We've got a potential bid right there from the 8 EMA on a retracement down at 58.17. It would be a great trade. We're just a ways off of it. Do you get that trade right now? It's going to be really tough. It's going to be really tough to get it. Back over here. What's happened here? We hit it perfectly, bounced up, didn't get it. We pulled our orders off. Why? Because if this thing goes down and starts taking a draw, I don't want to be any part of it. Anytime your trade, you don't get filled, and instead of getting paid, you don't get paid, you pull it. The last thing you want to do is make a winner a loser. This was a winner, and now it could potentially be a loser. That's a momentum killer, because not only do you lose the money that you risk, you're also losing the money that you didn't make. That's really hard, guys. That's really hard. I advise for your own sanity, just to stay out of those. Once it goes against you, see, look at that. Now you're in big trouble. Now you're sort of in big trouble, because if you would have taken that on the second time through, it's not there anymore. First time through is what we want. That's absolutely huge. All right, as far as crude oil goes, we'd be here all day waiting for that pullback. As far as gold goes, incredible move here. Look at this. There's your sell. So theoretically, we were in the right place. Maybe we should have left it on for more ticks. We could have done something like that. Let's back off to the 30-minute chart and see if maybe we got one more gold trade potentially that we could get involved with. Okay, this right here, sort of right around that Wall Street Open. That is the Wall Street Open. This big candle right here is your participation. Let's go ahead and take a look at what's happening here in the gold market with our Fibonacci's. That is sort of your New York range. Potentially, we could be right down there at 41.92.5. Challenging trade, I would think. 41.92.5, 1 unit. Let's go ahead with a buy limit and see if we can't just wrap this up. 41.92. Let's go 41.92. Let's see, 0.6. Well, let's go right on it. Boom, buy it. Let's see if we get it. Take profit. Let's go up and see if we can grab 5 ticks or so, somewhere in there. Okay, now let's take it right down to our 15-second chart. Okay, right there, boom, we just got hit. Pressure's on, pressure's on, pressure's on. We're either going to get the bounce right now or we're not. Okay, there's our bounce, bam, we're out. That's tick scalping. That's all it is. Let's look at our day. Okay, we made $140. We were only looking for $90. We made 140. We made 14 ticks instead of 9. So we outperformed our expectations. That's tick scalping. That's tick scalping. So I'm relatively happy with what we did here. This one right here, we hit our limit. I mean, we hit our goal. So go ahead and cancel that. We don't need that anymore. Pretty darn good trade, though. I'd be watching that closely. This right here, this is a fantastic prima facie evidence of why you pull your trades. If you don't get filled and it doesn't go your way, you pull your trades. That's the way it is. You don't want to make a winner a loser. That Euro FX trade was a winner for us. And if we were greedy and we tried to take it the second time through, it turned into a loser. And that means that we walk away not only what we didn't make, but we walk away what we lost. And we can't do that, especially when we're tick scalping. So we played that almost perfectly. We had 2 gold trades. That seems to be what's moving right now. That was a beautiful thing. Really, really happy with those trades. The bounce off of the 30-minute Fibonacci was really a good one. I mean, it really was a good one. There was your New York range. Went right down, didn't take hardly any draw at all, bounced right back up, and we're in the money. So that was fantastic stuff there. Frustrated with this. This one should have paid us, but we got to let that go. As far as WTI crude oil, you could probably be sitting there at 58.17 for a late day buy. You just have to be sure that you cut that off. That's tick scalping. All right, let's see. We have a few questions here. Bobby Bob would like to look at the U.S. dollar, Japanese yen. Sure, I'm more than happy to do that. Let's see. Eyes hazy. Wow, that's so swift but also dangerous if you don't act fast. You cannot hesitate. Eyes, you cannot hesitate when you're tick scalping. When it goes against you, you've got to have the discipline to sit, but when it comes time to get out. And you pull it off the board, you say whatever. But you've got to give it a little bit of a chance to work, but you can't commit to it. I mean, so it really is just, if you guys wanted to get really good at tick scalping, I recommend just going on demo and just working that timing. Work it. Get it going in your head that you say, okay, I'm aggressive. I got to get out. I got to get in. That's what it's all about. Remember, you don't rush your entries. Your entries should take time to develop. But when you get in that trade, especially when we're only looking for 2 ticks, 3 ticks, 4 ticks, you're in and you're out. What do you need to succeed? You need as fast of an internet connection as you can get. You need that. The computing power, the more robust, the better. Your brokerage service, your fills have to be as good as they can be. Now, one thing I will say about tick scalping, when you do it on the Forex, it's going to be different. It's going to be a lot different because the trades take longer to develop and you have a spread to contend with. So if you're pip scalping, then you're probably going to be looking for like 5 pips, 8 pips. And those trades are going to take longer to develop. What we just showed you is gold futures. That is about, on the short term, I mean, that thing is all over the place. The futures markets are a lot more volatile. You need volatile, deep markets. Let me see. T. Marina, when do we pull the trade again? If it comes down, just like this was a great example of this. So we were in the queue. You can see we sort of went up, and this bounce right here was beautiful. But we were in the queue right here. We were right in there. We were right there ready to go from 106.04. Or excuse me, 116.04. There was our fill. We should have been filled up right there, and we weren't. That was our bounce right up there. What was your high right there? 106.55. That was the 3 ticks we were looking for right there. When we didn't get filled, when our order wasn't filled and it was ignored, I pulled it. It was my decision to pull it. And the reason why is because the second time down, if this trade doesn't work, we lose. We lose the trade. And you're saying, okay, well, we still just lose what we risk. But you don't really lose just what you risk. If we were ready to dance and we were ready to go right there, price comes down and hits us, we don't get filled. We don't only just miss out on the money that we should have made on that trade, we end up losing money on that trade. So that's what we call making a winner a loser. And unfortunately, you've got to be able to have the discipline to pull that trade and not take it. And this is a great example because this trade was a loser. Turned out to be a loser. Broke against us. Bam, you're gone. You can't be holding it down. There's too many ticks. So if you're buying from 106.04 and you're taking, 106.01, you're taking like what, an 8-tick draw, 9-tick draw, depending on where you got filled up here. Nah. So that's when you pull it. If you've got your trade built, you're in the queue, everything's ready to rock and roll, and you don't get filled, that's when you pull it. It's too hard mentally to take losses on trades that should have been winners. All right, U.S. dollar, Japanese yen. We had a question on that. Let's go ahead and go to the dollar yen. 2025's high. We sort of made a big deal out of this. It's right up there at, let's see. We went up and touched that. So that high was right up around 161. So we got a bit of clearly some old analysis there. So you're up there right around 162-ish, something like that. You can see that you're definitely on the bull. I would be looking to buy this pair if I was doing it. So let's take this down to a weekly. Sort of a spike low there to last week's high, pullback zone right around 153.55-ish. Pretty good. That's down the queue a few hundred pips. Let's go to a daily. Daily's pretty good. We bounced right off our 13-period EMA, which is a fantastic technical tool. Right to 50%, which sort of coincides with that 13-period EMA. That's absolutely huge. So I don't trade 50% levels. I don't particularly like them. I think they're too dirty. You see a lot of chop and a lot of consolidation around 50%, but when it coincides with a 13-period EMA, yeah, you probably are taking that trade. So 155.70-ish, pretty nice bounce. I mean, it worked like a charm. 155.19 is fantastic. Maybe something down in there. I would just be watching this relatively closely the rest of the week. If we get a pullback down to that zone for the dollar yen, probably pretty good one. Probably pretty good trade. Remember, it has to do with interest rate expectations and everything. So you definitely want to be cognizant of what's happening with regards to those expectations. But for me, a little bit more of a pullback would be great. You can see 38% was just a wonderful trade last week. Went right down and then bang, bounced up, and now we're sort of rotating back down into the heart of this range, which started right in mid-November. So now late month, we're sort of creeping down, giving back those monthly gains. 62%, right around 155 and a quarter. It's probably pretty good. So that's what I would be looking at, Bobby Bob, as far as the U.S. dollar, Japanese yen goes. All right, everybody. As far as what we got going, we've got a few other trades. We'll show, let's see, one other one that's been pretty good to us, and I think Andrea mentioned it to begin the stream. Bitcoin. What do you really say about it? There it is. There was our buy, sort of waited for a little bit of a pullback, and then boom, off to the races. We're right up, sort of banging up against 90,394, and now we've sort of seen some sellers right there. Keep an eye on 90,000. Pretty darn good trade. And then Ethereum, sort of the same thing, just took off here in the last hour or two. Interesting stuff. Pretty darn good trades though on that 920 crossover. Love the 4-hour chart. Love the position. We'll wait and see how this one pans out as we roll deeper into the week. Remember, tomorrow's the Thanksgiving Day holiday. Liquidity is going to be drying up here probably in the next half hour, I would say. So be very careful with whatever you're going to do today. If we do get an active close, that would be great. I don't know that we will, though. A lot of times people start kicking off right about now. So be ready for this thing to dry up. And then also tomorrow, there's probably not going to be much U.S. liquidity in the markets. So be very careful with what you do game plan-wise. Tomorrow's not a day to take a lot of risk. Crypto will be open for business, though. So if you are holding crypto positions, anything can happen. We've seen big moves on Thanksgiving in the past in the crypto markets. So just beware. And then as far as Friday goes, we're always looking for a Black Friday move potentially. We just got to wait and see how it pans out. All right, everybody. No live streams for tomorrow or Friday. We will be back in the saddle Monday. I will be posting the stream schedule here relatively shortly in the How to Trade trading room. Feel free to cruise over there. Remember, Black Friday is on. A lot of sales pretty much everywhere in the world. Switch Markets is no different. If you're a new customer, you definitely want to check out the Black Friday offers over at Switch. All right, everybody, that's a wrap. That's tick scalping. We did pretty good today. Our goal was 9 ticks, and we ended up making 14 ticks. Not a bad day. Not a bad day at the park, thanks to a couple of gold trades. All right, everyone, have a fantastic trading session. Trade the action well, and we'll talk soon. See you.